Welcome to this video. In this video, I'm going to be doing a stock analysis of Nuburu. Now, if you don't know what Nuburu makes, well, currently it is a blue laser company, and they've recently just planned to acquire Orbit, which is a huge shift in business for Nuburu, and they're going towards software, which is quite interesting. Now, something you should note about this company is, as you can see right over here, they did a reverse stock split back in July of last year. This meant if you had 40 shares, then you would only have one share. This often happens because a company is worth too little to be on the stock exchange, and currently they actually are. If a company is below $1 for too long, then it can't be noted on the stock exchange. So I would be very, very careful owning Nuburu these days. Now, this shift, however, could be insane for Nuburu, and I do believe it could actually end up saving the company. And if they pivot away from these blue laser stuff and more of against software. Now, some key notes is the market cap of this company is very, very small at $71 million. And of course, it used to be quite a lot lower because the stock price was so much lower. So be very, very careful these days. And the beta in this stock is insanely high at 3.3, meaning it is 330% more volatile than the average index. Then as well in their earnings, as you can see right here, if you look at their revenue, they barely made any money last year. 152,000 individuals make a lot more money than that sometimes. And as you can see, they barely sold anything in the United States compared in 2024 compared to 2023. So overall, it isn't a company that is doing so great these days. Now in the overview, we can also see they have a ton of debt. As you can see, 33 million and a market cap of 71 million. And that is the market cap is only so high currently because the stock price is a bit inflated currently, in my opinion. So if the stock price falls, Nuburu could be in huge, huge troubles. Now, is it to say Nuburu can, of course, rise quite a lot? No, of course it isn't. If you want to rise to the earlier peaks, as you can see, we do see some peaks right up here where we actually was for quite a short amount of time before the stock price then crashed down. But the next proper support level or breakthrough point is right up here at 1.3, which is more than 100% up from where we're trading currently. So if we can break through this right up here, that is a bit too crooked. Let me just fix that. If we can break through this one first and then disappear, of course it could be worth a lot more, but we need to see the integration of Orbit first. Now, if you look at the seasonals in this stock as well, it is quite horrid. As you can see, a lot of minuses. So be very, very careful if you buy this stock. This could be a meme stock or a hype play these days. We can also see that in the volume. As you can see down here, we have a ton of volume recently, but overall the volume in the stock really isn't that great. And volume is how many shares are being bought. So of course, a lot of shares are being bought recently, and that, as I said, that is because they're planning to acquire Orbit, a software company. But currently they're not software, then blue lasers, so it is a very interesting pivot for the company. And currently as well, we've also just been up here in overbought. Now we have taken up quite the top of that. We are sitting here in just the upper channel of the RSI. Of course, the company is more volatile when it's in overbought in the RSI, but of course we want to see it to continue to stay up here in the RSI, meaning there is more buyers than sellers in the market. If we go down here to the sold channel, of course it's going to be quite poor because then the stock price is going to tank, but it wouldn't even surprise me if we fell all the way down here into oversold territory. We are minus 17 for the day, and tomorrow we could be at minus 20, we could be plus 30%. Be very, very careful in this stock. Now, if I scroll down here to look at the technicals, as you can see, for the day it's a buy, for the week it is also a buy, and for the month, however, it is a neutral. And the reason for that is it has been quite a poor stock, and recently this stock explosion has just been the reason that it is a buy. But overall, I would be very, very careful in a stock like this. Also, the fact they only have 8 employees is a huge, huge danger signal for me personally. Now, personally, I'm not going to buy any until I see some proper signals and I want to see the trade sideways. I don't like this up and down quite a lot. So, of course, this could be a huge, huge play if they can do this properly, and they could be worth maybe $4, maybe $5 within a year. But overall, be very, very careful in a stock like this. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the companies analyzed in the comment section below.